Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik, and in this video, we're going to be doing a brief stock analysis on Illinois Toolworks Incorporated, ticker symbol ITW. So this is actually a company in the industrial sector that make a variety of products and have been innovating for a very long time in the industry. And we're going to take a look, first of all, at some of the products and some of the segments of their business that they do operate in. And just to give you an idea of their size, they are valued right around $60 billion right now. That's their market cap. And in 2020, their total revenues were around $12.6 billion with an operating margin of 22.9%. And they also note here that they do own or have about 18,500 patents, which is pretty cool and shows that they have been innovating for a long time. And if we look at their 7 segments here, the first one is automotive OEM, which accounts for about 20% of their revenue. Then they have construction products, which is about 13% of the revenue. Food equipment is about 14% of the revenue. Polymers and fluids is 13%. Specialty products is 13%. Then they have test and measurement and electronics, which is 16% of their revenues, and welding equipment, which is about 11% of their revenues. So they do have a lot of products in a lot of different areas, but it's all industrial focused things that some of them kind of work together oftentimes. And we're also going to take a look at their earnings here from the second quarter of 2021, which they just released at the end of July. So their earnings for the second quarter, they had total revenue of $3.7 billion, which was an increase of 43%, and that included organic growth of 37%. Their operating margin was 24.3%, and they had GAAP EPS of $2.45, which was an increase of 143%. And they're also raising some guidance here, which is always good to see. They're raising their full year organic growth guidance to a range of 11 to 13%, and their GAAP EPS guidance to a range of $8.55 to $8.95 per share. And they also have some notes down here about their balance sheet. They do list out their balance sheet and income statement. So right here, just looking at the incomes. Operating revenue, like we said, it was around $3.7 billion compared to $2.6 last year in the second quarter. And their operating income was $893 million, which was about double last year's of $449 million. And their net income there, a total of $775 million, which was again about double, even more than double last year's second quarter of $319 million. Which gives an earnings per share there of $2.46 compared to only $1.01 last year. And you can see that they have raised the dividend since last year. They paid about $1.14 in this quarter and $1.07 last year in this quarter. And also they have talk about shares outstanding of stock. So it looks right now that they have about 315 I assume that's million shares. Yeah, 315 million shares outstanding right now. And last year that was 316 million. So that number has gone down just a little bit, which is good to see. Obviously, we would have to probably look on a bit longer time scale to see if there's a consistent trend there. But right off the bat, that is a good trend to see for shareholders. And looking at the balance sheet as well, current assets sitting around $6.5 billion, which is pretty much right in line with where they were at the end of last year. And then total assets there, also $15.6 billion, pretty much the exact same as at the end of last year. Current liabilities, only around $2.9 billion, close to $3 billion. So well under 50% of those current assets. And total liabilities around $9.1 billion. Those are definitely down around $700 million from just the end of 2020. So that's good to see as well. So honestly, just from a brief look, not going too in depth, their balance sheet looks pretty good to me, fairly healthy, and they do have a lot of good things going for them. I think as we continue to recover even more out of this COVID-19 pandemic, I think they will only have something to gain, from the recovery even more. So we also want to take a look at the dividends. Right now, their current yield is around 2.26%, which is an annual payout of $4.88. And their payout ratio is right around 57% right now. I know on their investor relations page, they said their target payout ratio is right around 50%, in that range at least. And also a nice thing to see is their dividend growth rate over the past 5 years is 15%, which is pretty good. from, you know, a solid industrials company like this. And also a note on the dividend growth. Seeking Alpha here says 26 years, but a lot of the times they've been wrong in the recent past with this dividend growth number. And I looked at a few other sources, and their actual years of dividend growth is 50 years, which makes them a dividend king at this point in time. So that is pretty cool. And this last announced dividend of $1.22, we can look at the dividend history, but I'm pretty sure that was a dividend raise actually. So if we look here, yeah, their last amount was $1.22, and before that it was $1.14. So it was actually about a 8-cent raise, which is probably around a 7% increase there. So, you know, that's not the biggest raise ever. And compared to their, you know, 5-year average growth rate, that's not too great. But, you know, that's still definitely a decent raise to see coming out of Illinois Toolworks this year around. Also, we want to take a look at the PE ratio. And, you know, through the 2008, 2010 range, they were sitting around 10. Probably most of these numbers are between 8 and 12, so near 10, which was common among a lot of companies, I would say. And then they were going up to 15, 17, 20, and pretty consistent around 20 over the past few years. And just this past year, they've been up 25, 30, and right now they're sitting at 25.73. So definitely a little bit higher of a PE ratio than they've had in the past, you know, 10 years or so. But you can see they have been growing earnings pretty steadily. No like crazy growth there with the earnings, but you know, it's a steady upward trend, which is what we like to see. And the stock price has been seeing a little bit of a steeper trend the past, you know, year or two. So that's why that PE ratio has gone up a bit. And we can compare that 25.73 to the overall industrial sector. We can see that the average for the industrial sector is about 25.16, which pretty much puts them in line with the sector there. They don't really fit super well into any of these categories. Probably if I had to pick one, I would say industrial products. So if we look at that segment, their average is 27.35 for the PE ratio. So in that case, you know, Illinois Toolworks is a little bit, their PE ratio is a little bit below that of their industry, which is definitely good to see. And also right here, we're going to look just a little bit of a stock trend here, just to see where the price has been. So since, you know, the beginning of September, they've had a decent little pullback here. And the 20-day simple moving average has actually fallen below both the 50 and 200-day moving averages. So you know, those both kind of show it's a bit of a downtrend. You know, we may have hit the bottom. You don't really know for sure. But we're certainly back in levels that we're at around March and January since the beginning of 2021. So, you know, pretty much most of the growth we've seen this year from the stock has, you know, basically been taken away by this recent pullback, which could mean it's a decent buying opportunity. We can look a little bit further out as well to see, you know, how it's been looking. And basically, since the pullback in March of 2020, they were down around 125 in that pullback. And before that pullback, they were up in the 180 to 190 range at the very, very top there. So they're definitely a decent bit higher than, you know, even where they were at the beginning of 2020. But they obviously recovered fairly quickly from that crash, and, you know, have been going, you know, steadily up. They had a nice run here in March and April of this year. So I think right now, you know, is definitely not the worst time to be buying this stock. For me, I don't own this stock, so I can't comment, you know, on any average costs or anything. But I would definitely like to see it a bit lower, probably below like 200. To be honest, before I would be interested in buying, maybe around the 205 level, but I would definitely like to see it a bit lower. You know, right now the dividend yield is only around 2.25% as we saw. So it's not that great of a yield, but they do have that nice dividend growth rate of around 15% over the past 5 years. But, you know, that could be slowing down as well, since this year we only saw 7%. That is something to keep in mind, that the past 5 years of dividend growth is definitely not a predictor of the next 5 years or 10 years or even 15 years. So that's something you got to keep in mind when looking at a stock. So for me, I'm not going to be buying this stock right now, but I would be interested to hear what you guys think of the company. If anyone does own this, it's definitely a good quality, high quality dividend stock, I would say, in my opinion, but it's definitely not one of the most popular among dividend investors. So I would like to hear if any of you guys do own it, and if you have any strong opinions either way. But with that out of the way, I will wrap this one up. And if you do want to see another video about another stock in the industrial sector, I will leave a link right up there if you guys want to check it out, to a video I did on Caterpillar stock, which is another one of my favorite industrial stocks that I do in fact own. And with that, I will see you guys in the next one.